Welcome back to Rekt Radio, the only show that sees the crypto world inching toward your retirement account and shouts, floor it. I'm Sunny, and folks, the walls between the old world and the new are not just crumbling, they're being bulldozed.
And I'm Cole. I'm here to point out that when you bulldoze those walls, you'd better be sure what's on the other side isn't a cliff. We're about to unleash the most volatile asset class in history on the least prepared investors. Let's get into the news before my 401k gets a win-moon option.
It's happening, Cole, and it is glorious. The final frontier is being crossed. We're finally seeing the first real push to get crypto into American 401k retirement plans. We're talking about a major provider, Digital Asset Custody and Financial, getting the green light. This is the ultimate mainstream adoption event. It's not just for traders and techies anymore. It's for everyone. It's the democratization of wealth for the next generation.
The democratization of risk, you mean? This is terrifying. The average person doesn't have the time or expertise to manage a portfolio of stocks, let alone a hyper-volatile 24/7 asset like crypto. What happens when a 60-year-old on the verge of retirement sees their nest egg drop 40% over a weekend because of a rumor on social media? There's no circuit breaker. There's no closing bell. This isn't empowerment. It's feeding lambs to the wolves.
What could this become? It becomes a world where everyone, not just the wealthy, has access to the best performing asset class of the last decade. It forces financial literacy. It gives people a hedge against inflation that they can actually own. We can't keep gatekeeping this technology. This provider is starting with accredited investors, a careful first step, but it paves the way for a future where a small Bitcoin allocation in every retirement plan is just standard practice, securing futures instead of letting them get eaten by inflation.
What are the risks right now? The risk is that we're putting a financial superweapon into the hands of people who've only been trained to use a water pistol. The system isn't ready. And I'm not just talking about the investors. I mean the entire legal and social structure around it. We're seeing articles now about the nightmare of trying to divide crypto assets in a divorce. No one knows how to value it, how to track it, or how to enforce a settlement when one party can just move the assets to an untraceable wallet. You want to put that chaos into a 401k?
But Cole, you're missing the point. These growing pains are exactly why we need broader adoption. It forces the system to adapt and mature. And it is. Look at Ukraine. They're on the verge of passing a comprehensive bill to fully regulate their crypto market. They're creating clear rules for service providers, setting up a licensing regime, and integrating with global standards. This is how you solve those problems, by bringing it into the light, not by pretending it doesn't exist.
Oh, you think a bill in Ukraine is going to stop what's really happening out there? While politicians are debating tax rates, a retired police officer in Australia just lost his entire life savings, $12 million, to a sophisticated crypto scam based in Thailand. They built a fake relationship with him for months, lured him onto a fraudulent trading app, and bled him dry. That's the reality for real people right now. These global criminal networks are running circles around law enforcement, and you think a new piece of legislation is the answer? That's not a shield, it's a piece of paper.
Wait, let me jump in here. That story is tragic and every bad actor should be prosecuted. But that's a crime problem, not a crypto problem. Scammers used to use gift cards and wire transfers. Now they use crypto. The solution isn't to ban the technology, it's to build better safeguards and educate users, which is exactly what happens when it becomes a regulated asset class. Regulation brings legitimacy, which brings better security and consumer protection. It's an evolution.
It's an evolution that's happening far too slowly with far too many casualties. You can't celebrate putting this in retirement accounts while simultaneously admitting the world is a minefield of multi-million-dollar scams that can fool even a veteran cop. The user experience is fundamentally unsafe for the vast majority of people. Until you fix that, all this talk of mainstream adoption is just a recipe for disaster.
I think you underestimate people's ability to adapt. And besides, not every part of this world is so serious. Some of it is about culture, community, and frankly, art. Let's talk about the cultural layer of the ecosystem. The knitted hat from the Dogwife hat meme just sold at auction. Any guesses on the price?
I'm afraid to ask. $1,000? $10,000? No, in this market, probably something absurd.
$800,000, and it was bought by the founder of a meme coin launchpad. This is beyond just a silly picture, Cole. This is a cultural artifact. It's proof that a powerful brand and a loyal community can create real tangible value out of thin air. It's performance art, it's brand building, and it's a testament to the power of decentralized culture. What could this become? It becomes a world where value isn't just determined by cash flows and balance sheets, but by belief, community, and shared narratives.
An $800,000 hat. Let me repeat that. Someone spent nearly $1 million on a piece of wool worn by a dog. This isn't a new paradigm of value, Sonny. This is a symptom of a market that is fundamentally broken, completely detached from any semblance of reality. It's the peak of speculative mania. It's like seeing someone pay $1 million for a single tulip bulb in the 1600s. We all know how that story ends. It's insiders paying other insiders exorbitant amounts of money for junk to create a media spectacle and pump the price of their tokens. It's not culture, it's a marketing expense masquerading as a sale.
You see a bubble, I see a renaissance. It's messy and weird, just like every other major cultural movement in history. It's pushing boundaries. We even saw a fan throw a crypto-branded dildo onto the court at a WNBA game. It's bizarre, yes, but it's a sign that crypto is seeping into every corner of public life. It has mindshare. It's impossible to ignore.
We've officially reached the throwing things on the court stage of the market cycle. Wonderful. So your bull case is that we have unregulated retirement products, rampant global scams, and people are spending a fortune on meme accessories and planning marketing stunts at basketball games. This isn't a renaissance, Sonny. It's a circus, and the clowns have taken over the ring.
It's the beautiful, chaotic energy of creation. But I know what you need. You need something solid, something grounded in the numbers. Let's look at the king. Let's pull up the technicals on Bitcoin and see what the chart is telling us right now.
After that tour through the funhouse, I could use something grounded. Let's see what the digital tea leaves say. Are we buying, selling, or running for the hills?
The verdict is clear. The overall summary for the one-day chart is a buy. The market is signaling that despite the noise, the underlying direction is positive. But here's the key. The moving averages, which measure the powerful long-term trend, are sitting at a strong buy. That's the deep ocean current, Cole. It's telling us that the foundational strength of this market is undeniable.
And once again, you conveniently ignore the other half of the dashboard. The oscillators, the gauges that measure real-time momentum and buying pressure, they are flashing a hard sale. Not neutral, not weak, but sale. You have a complete and total divergence.
The past is telling you one story, and the present is screaming another. It's not a divergence, it's an opportunity. The strong buy on the long-term trend shows us that the fundamental bull case is intact. The sell signal on the short-term oscillators just means we're having a healthy, necessary pullback. It's shaking out the weak hands and offering a discount to the smart money that understands the bigger picture. You buy when the short-term indicators are oversold, as long as the long-term trend remains strong. This is a textbook buying opportunity for anyone with a bit of conviction.
It's a textbook bull trap. The moving averages are lagging indicators. They're the rearview mirror. They confirm we were in a strong uptrend. The oscillators are telling you what's happening now. And what's happening now is that the buying pressure has evaporated and sellers have taken control. You're telling people to buy into a falling knife because it used to be going up. This divergence is a classic warning sign that the primary trend is breaking and a major reversal could be imminent. It's the market telling you the engine has stalled, and you're telling people it's a good time to get on board.
That's all for this episode of Rekt Radio. I see an unstoppable march into our financial system, a maturing regulatory landscape, and a chart offering a beautiful discount. The future is being built, even if it looks a little weird sometimes. Stay bullish.
And I see a world of unacceptable risk being put on unsuspecting retirees, devastating scams, and a market so frothy it's paying nearly $1 million for a hat. The charts are screaming that the momentum is broken. Please be careful out there. You've been listening to Rekt Radio.